DBS, great numbers, going great for them?
Yeah, record profit, as it was for UOB. But I think a few more tails behind the headline, behind the record profit. A little bit of different in the composition of growth drivers this time around, because you're coming back off 2022, which saw net interest income up 30% for the trio of banks, where non-interest income was down 6%. So it's always going to be very difficult to back up this net interest income growth with net interest margins somewhat consolidating. Yeah. You had 9 consecutive quarters of quarter-on-quarter net interest income growth, which possibly that might be the end of it for some time. We expect some consolidation in the net interest income, because from a net interest margin perspective, how do you back up from, let's say, 475 basis points of Fed funds hike over 13 months or so? So, yeah, lots happening, and a lot happening. What's important is that loan growth is still there. It's low to single mid-digit percentage growth for the two banks, and you've also got that guidance for the remainder of the year. But you are expecting double-digit for DBS, fee income growth, and high single mid-digit income for fee income growth for UOB as well, while NPLs do stay constant, 1.6% for the ratio for UOB, 1.1% for DBS.
I just want to zoom out a second, because, you know, for anyone that's internationally inclined and watching this right now, they're going to be thinking that the Singapore banks, what the intrinsic reason why you'd invest in them, they're relatively stable, you're going to get a solid dividend yield. But I suppose that the one question that some investors will ask themselves is, where am I going to see any kind of PX upside? Is there any circumstances that you think that we can see uptrending in terms of the share price, and not just, you know, the strength that you're getting in terms of the return on dividend income? Yeah,
well, first of all, that dividend income is important. When you look at these three banks, 28 cents in the dollar goes to work in the three banks every single day in our stock market. There's that stability anchoring aspect as well. They're 45% of the STI. They're 10% of the FTSE APAC ex-Japan Sustainable Yield Index, which is not looking at high yields, but more cash flows and balance sheets. But for that impact on the upside, for the growth, you've got to remember that something like 40% of the total income of these banks is not actually generated here in Singapore. It's generated across Asia Pacific. And of course, you've got IMF and OECD maintaining emerging Asia will be the growth engines for Asia for much of this year. So there's a lot of I guess from the corporate side of their books, there's a lot of thematics going on in the region, whether you're looking at the FDI that's coming into ASEAN because of green mining, EVs, digitalisation is also important, not just from a corporate development aspect, but also from the consumer benefit.
Who's benefiting most from those inflows between three banks?
Who benefits the most from the inflow?
Yeah.
Well, it kind of changes. There is, for the institutional inflows, so far the three banks in total have been booking outflows. That's despite them actually, if they do sustain this morning's session's gains, your three banks are actually in the green for the year to date, marginally, versus Dow Jones 7 banks, which are down around 4%. Your S&P 595 banks or so, industry select index is down around 18%. So they are still outperforming pretty well. But what we are seeing as well, not just for the banks, is that the grip that macro trends are having on these important sectors is dissipating somewhat. And you're seeing banks left a little bit more to their own intrinsic drivers to actually prompt investors for flows.